Hi, thanks for tuning in. This is a weekend review for the week ending March 4th, 2022. We're looking at a weekly chart of the S&P 500. Boy, do we have a lot to talk about this week. So, the geopolitical environment remains highly uncertain. So, that adds an element of risk. We're in obvious downtrends. Where we now have a coil on the momentum, right? And the last time this happened was here at the top. You get this little coil and then an explosive move. So that's kind of what I'm expecting here. Either a big continuation lower of the existing trend or a breakout. But sideways is no longer an option, right? They've hit the downtrend line, and either this is going to break, or and it's also really interesting that it aligns with the middle of the Bollinger Band, which is really just kind of the mean. And I want to have some theme here for this video, because a lot of what I've been looking at recently is how to identify when a plus or minus 2 standard deviation move ends. And you want to be as objective as possible. How do we quantify this? How do we, write a script to scan the market for this? Because I think a lot of the people are struggling with this concept, and how to trade it for that matter. So first off, let's just talk about what do I mean by that, and we'll take this SPY chart for example. The Bollinger Bands are giving you plus or minus 2 standard deviation from mean, which is SMA 20. By default, that is the configuration. And so when you've got something that closes outside the bands and stays outside, that's generally signaling a trend change. So this whole time, right, we could sit here and say this thing is stuck in a range, right? When did she break out of the range? When she closed below the bottom of the Bollinger Band. That signaled the start of the move. And so what's also interesting is, getting back inside and then ultimately getting above the 20 is what generally ends these moves as well. So you get this minus 2 standard deviation move. Price goes from 455 to 420 in about 4 sessions. Really, I guess 3, because that was a huge gap down from that close to this open. Big move in the indexes. Goes inside, can't get above EMA 5, finally gets above EMA 5 and SMA 10. And at this point, you did have a reason to participate this day, the 28th. But what happened here is, by capturing the 20, that's usually the signal that the downtrend, or in this instance the downtrend, but the intermediate trend is done. But they did go on and set a new low. And the clue was giving up the 20 again. So there was this fight that took place. And what you're trying to do is again, understand when is the move done. This gives you 2 things, right? A, this gives you when you need to flip to calls or buy an equity or long. It also tells you when it's time to reallocate. Because until you get that, the direction in this particular instance must remain down. And so you've got a similar setup here in oil, in APA. These names that I've been playing, gold is another one. They've kind of been in this range. And, they just tried to break out of it. Couldn't do it. right? Fell to the bottom of the band, closed below, then captured EMA 5 and SMA 10, and that started the move. But really, you got confirmation that this move was done, this closed below the bottom, when she recaptured the 20 here. So I hope you get the theme here of how do we know that this move is done, and how do we know it's time to flip direction, right? And if you can't identify that, you're going to find yourself in a world of pain, because these charts are doing this on the monthly, right? APA was inside this range and then closed above in January, right? And remember, a breakout, when you're breaking out of a trading range, how does that start? And it starts the same way every time. It's a 2 standard deviation from mean move, and it's persistent. And what do I mean by that? There's no reversion to the 10. There's no reversion to the 20. They capture the top of the band, and they ride the 5 the whole way. Some people like EMA 8, some people like the 4, some people like the 5. The point is, it rides the top of the Bollinger Band, and it rides EMA 5 all the way to the destination. And that's how breakouts start. So, in my opinion, APA is breaking out on the monthly, breaking out on the weekly. And this is market-generated information, right? This is where I was looking to sell APA, sell APA, sell APA, but now they're breaking out on volume. There's no longer a bearish divergence, and the bulls are marching higher. And this is, in my opinion, a wave 3 breakout. And again, 2 standard deviation from mean move. So this is somewhere you want to participate, right? This is a trending stock that's trending higher. GDX is another one. GLD is another one, right? These things are all above the top of the Bollinger Band. And remember, what's the theme here? How to tell when a 2 standard deviation from mean move is starting and ending. Because in both instances, we're going to learn, right? Do we need to participate now in this market? Because if this is a look above and go, which is what it's starting to look like to me, gold could be heading to 203, downside risk of about 2%, upside risk of about 10%, upside reward of about 10%. So this is obviously something I'm very interested in playing. You have this range, and you now have a breakout above the top of the band, right? That's telling me the breakout has started, and that you should be looking to buy any dips into weekly EMA 5 and top of the Bollinger Band. Gold is of interest to me this week. Let's take a look at TLT, right? These defensive things. No, we're not breaking above the top of the Bollinger Band. Right? I don't see a breakout here. I see possibly a mean reversion, possibly the start of something bigger, but I also see failure to get above the 10, and the 10 is declining. You see how that's exactly the opposite of this chart? Right? These are the charts we want to be in and focus our time and energy on. In GDX is really another one. I mean, this is a breakout above the top of the band. Breakout is now underway. GDX is not as clear as gold, GLD, but it's likely to follow. And so you're getting these 2 standard deviation from mean moves. The risk on them, right? When is it that they're done? Well, the first line of defense is the yellow line in both directions, and the top of the Bollinger Band. So I'd be looking to buy at 35, 36 bucks this coming week. And the top of the band and EMA 5 are going to rise the most every single week in this particular instance. But let's just keep going through the sectors and spaces here, right? We have this huge range that price stayed in, then closed above the top of the range, closed above 2 standard deviation from mean, went sideways, which is totally fine, then closed back inside and below the 5, below the 10, below the 20. That to me is telling me bull trap. This week here is when we knew it was a trap. Okay, now the question is true in reverse. How will we know when this 2 standard deviation from mean move has ended? Well, we haven't captured the 5, haven't captured the 10, haven't even touched the 20. So until price can get above 205 on a weekly close, and more specifically 209.05, this high here, there's no reason to participate in this sector. Now the good news is this is a reversal candle. This is a reversal candle. The bulls are playing defense. This is a double bottom setup. It's possible you have a 5-wave move down complete. All right, that is possible. Now we're looking for something like this. It's still too early to tell, but the point of me bringing this up is this 2 standard deviation from mean move over? And you can sit here and say, well, yeah, we're back inside the bands, so we're within that 95% of the time, but that's not enough, right? You need to see the histogram curl, which you have. You need to see price get above SMA 10. You need to see EMA 5 cross above SMA 10. This is what happens every time. It happened right here. Right, it happens down here. Happened up here at the top. Right, got below all of these, got the cross. We just don't have that. We just have a downtrend right now. Downtrend. Right, broke one of the downtrend lines. Got above the 40. Back below all of it. Okay, so it's possible that we've put in an impulse and now we're in wave 2 and we're going to get something like that. Definitely possible. It's also possible we're still looking for something like this, some ending diagonal to complete this wave 5. I'm not sure I think that too much, but this is kind of the target here. Wave 1 equal to wave 5. We'll have to see. Again, daily time frame, no trend. All right, so how would you play this? Dips into 194, 195 are for buying, 207 are for selling. Wait for acceptance below either of the bands to signal a breakout has started. Because we have an obvious trading range here. Very obvious. Even if it closes down below, you're looking at 188 as the low, double bottom setup, looking at a double top setup here. Obviously we're in the middle of the range, so there's no edge either way. Right? And people want to say, well, I know this because of this structure. I mean, maybe. That's fine. That's very subjective. I'm telling you, objectively, there's no trend on the daily chart, and you're in the middle of a trading range. So that means avoid. QQQ, downtrend, below the 20, sloping down. Try for this bottom, right? Get below, captured the 10, the very next candle, went sideways. So either we've got an expanding ABC, or you've got this ABC that's just completed, and now we're getting a new impulse lower. Something like that. Again, the odds favor another low, just given the fact that she can't get above the 20. As I was telling you earlier, that's kind of the signal that I look for. I want to see price get below the bottom of the bands, recapture the 5, recapture the 10, recapture the 20, then go sideways to up. And in each of these instances here, when she's tried to bottom, when she's got the 20, when she caught the 10, it immediately led to another leg lower. And so this to me screams downtrend, screams top. You look at the weekly, we've broken the ascending channel. I said as long as we remain in that channel, there's no panic. We've closed below this channel. We've now to some degree back tested the channel. Again, bottom of the band, close below, never get above EMA 5. This is a very strong downtrend. PPO momentum accelerating. You can see it here. Below the zero line means GG for the bulls. It means do nothing until you get an actual curl. Again, we're looking for a capture of the 5, capture of the 10, and then you can go long. And until you have that, you better be trading the daily time frames, the hourly time frames. I want to talk about the hourlies here for a minute. These hourly time frames are too quick for me to trade. I'm a trend follower. I want to be on the right side of the trend, and I want to be able to do my job all day and just make money, not worry about losing money. That happens when you're on the wrong side of the trend. If you're on the right side of the trend, you might lose money for a month, and then next month you make it all back. But if you're on the wrong side of the trend, you lose money month after month after month. All right, so it's important to allocate properly into things that are on the right side of the trend. So, you just have to focus on identifying the leaders. Right now, it's very obvious that that's energy, that's metals, that's commodities, and, things like SQQQ, right? Because we're kind of getting to that point where, this is another bull setup here. That whole sequence was tradable. This was tradable for the bears. And now we're back in a bull sequence, right? And the moving averages are showing you this. I mean, look, SQQQ is above the 200 on the daily, is above the 40, is above all the moving averages, closed above the top of the band to try to, remember, that's what triggers these breakouts. They get everyone going in one direction, and then you never get a chance to hop on board because you're waiting for the 10, you're waiting for the 20, it never comes. So right now we have one of those instances where SQQQ closed above the top, came back to the 5, and kept moving higher. And you look at these charts, it's still below a declining 200, but for the first time is now above all the other moving averages. And what's very, very interesting is can't get above the top, right? This is where the sellers are coming in, but the bulls are defending the 5. And so we're going to get a break here real soon. You have this inverted head and shoulders look. That pattern is still in play. You do have a failed breakout attempt, which is bearish. But we're looking at, $76 on SQQQ if she can get above 48. And this is one of the charts that I'm definitely watching for a breakout play. Like I said on Qs, they're done. They're going to make a big move here. And if the move was going to be higher, in my opinion, they would have captured the 5. They broke the previous week's high and sold off all week. Right? You've got this coil now. You're below the zero line, so the odds favor bearish resolution. You have this head and shoulders look. We have the failed breakdown, but we're going lower in a downtrend, right? So this is the dominant force on this chart, and it's in a downtrend on everything. And we'll end here with the monthlies on some of these charts just to give you some perspective. I mean, your PPO went from 16 to 11. If this monthly is really going to slice through the 20, the target's the bottom of the bands at 263. That's it. And price would come all the way back down to test the previous high, which was previous low, which was 743. So that's another 4. And again, this is in a solid uptrend. But this is, let's see, a reversal candle, this one, and they're trying to confirm it by closing below the low. And they haven't done it yet, but when they do, it's going to unlock the 263 level. So that 334 level is very, very important for many, many reasons. And this is now giving me this inverted cup and handle look. And getting below 334 will certainly open up this type of look, where it's just going to meander down here. And again, using the weekly, we're looking for this range, 260 to 300. Right? You're looking at another 10% decline at minimum. Right? 260 is somewhere down here at around 21%. It's not going to go in a straight line, but you have everything you need for that equation to take place. From a fundamental standpoint, you have everything you need for that equation to take place from a monthly, quarterly trend following standpoint. And yeah, I mean, and you have it on all the indexes. You had the non-confirmation. You now have, look at that, below the middle of the Bollinger Band, right? Remember, when do these moves end? When they can pull back to the 20 and they can keep going higher. So as long as they stay inside, it's just an inside month. But you do have this inside candle. So this 3-1-2. So whatever breaks is going to unlock either the bottom of the Bollinger Band, which is down here at 154. This will take time to resolve. Or it's going to unlock the top here at 227. So above 209 equals 227. Below 187 equals 168. And that'll happen quick. And, there's not a lot you can do until you see this resolution. And if IWM and IYT are doing what they're doing, right? Monthly bear cross, resetting the line. The 20 is likely not going to hold at this point. If IYT and IWM are done, and IYT hasn't had a new high now in 1 year, IWM hasn't had a high since November 20, so going on 3-4 months. Qs haven't had a high in 3 or 4 months. I mean, this is a bear market. There's no other way to say it. And the way that I've been tracking it, the riskier things like the pot stocks, they topped here. And I think this was some wave 3 at the time. And now we've put in a whole new impulse leg higher, and things like pot stocks are below these levels. You look at things like IYT, they topped back here. You look at things like IWM and small caps, they topped back here and started distributing. Right? So it's like there's been this risk off sentiment. Even as price went higher, people just need to get out. There's been this risk off sentiment going back to 2018. And if it wasn't for the COVID low, we must spend all this money, I think you would have seen this market correct from there. But you got the fundamentals. You had prolonged 0% interest rates, allowing someone to unload positions and allowing retail to pile in. And now, in my honest opinion, we're in for a long period of pain. I highlighted all the other points where you had this technical condition occur. In this particular instance, when it came off the low, it crossed bear and then marched higher and set new highs. every other instance, and I can go back a long way, has led to new lows, especially a test of the 40. A new low in the sequence, right? So like it started here and we got it ultimately another low. Started here, we got another low. Started here, we got another low. Every single one of them did. And the question is, when I look at these charts, I just have a general rule of thumb, right? When you get these crosses, it's signaling that the Bears are taking the ball and they're going to start running down the field in a trend condition to challenge the previous pivot. And so you have that here at like 11 and change, and you got that here at 3 and change. And right now we're at 9. So the Bears could have the ball, and this is the angle attack, right? You had the angle of attack here. Right? So that lasts 11 months easily. This could easily last 11 months. Right? And look at all the other times this happened. A year and 8 months. A year and 6 months. Like, that's where we are. We're in it's going to be a pain in the butt to trade these indexes for probably another 8 months. And the only things that are doing well are things like oil and gold, the commodities. And if you follow cycles, it's often repeated that, at least from what I've read, that the financials, the XLUs, right, the utilities, the XLPs, the consumer staples, these things top last. The small caps top first. The micro caps, the small caps, that was January, February of 2021. And then you've got the mid caps and the large caps to top last, and that all happened in, all the way into November of last year. And now we've got an election year, so you've got tons of uncertainty into November, and it's March. You easily have 9 months of de-risk. You have a fundamental landscape that is changing. Right? Are we going to be lowering rates anymore? Are rates increasing now? For how long? At what rate? We should get some clarity on that come March. But all of that is a changing landscape. Right? We've had 0% interest rates, and they've been telling us that that's going to change. So we're going to find out by how much and what rate of change in likely the next 2 weeks. And once the market, in my opinion, has that piece of information, they could do one of two things. They can accelerate the de-risking process, stay the same, accelerate, decelerate on all the high-risk assets, the altcoins, the stocks that make no money. I'll show you a couple here, like SE, for example. Like, accelerate the de-risking in these names, or come to the realization that we're not going to have 15 rate hikes this year after hitting the bottom of the band, and put in something like this. Retracing this move about 50%, giving you more than a double over the next 6 to 9 months, and then another move down, right? And these ABCs separate the dominant moves, the primary moves, the motive, the impulse wave. There's so many ways to say it. So, we're looking for a counter trend move on all of these high growth names at some point. It's just from where. And generally speaking, IWM has been the leader at telling us when. And so this whole sector, and historically speaking, doesn't really trend for long. January 2013 to February, so trends for 1 year. February trends for 2 years. April to April trends for 1 year, and each time you get a year or two of hell. And it's only been 1 year right now of hell So it could be another year, another 6 months before these stocks come to light. And, you're really not going to know until you're above this level here at 209. And they're setting this up now to kind of coil into OPEX and then make their move afterwards. There's one of two things, right? This could be some triangle where they're just like trapping a bunch of longs. You break this low, that unlocks the 170, 168, 165 levels that we've had on the chart. Or they're just going to go sideways until they escape this downtrend. And look at that. You now unlock the gap up here at 230, this gap here, this breakdown candle high. You unlock all of those levels. So we just don't know which way it's going to go yet. And when you're range bound, all you can do is buy and sell the extremes. And really, we don't like to trade range bound stocks. We want to trade stocks that are trending higher. And so the focus must be on identifying stocks that are in the process of plus or minus 2 standard deviation from mean. Identify pullbacks within that trend that you can hop on. Objectively identify a script that will allow you to scan the market for stocks that look like this. I'm giving them to you right now. I'm not going to give you my script. If you read this video, you could probably write your own script. It's probably just 3 lines of code, and then scan the market for that. But I'm giving you right now, it's gold, it's XLE, it's XLU, XLP. And all of these things have so much left in the tank from what I can tell. Right? So like any dip into $68 on XLE is a buy. It's at 75. So it can drop 10% and it still be a strong buy. And as long as it stays above this orange line, and really the green line, as you can tell, this 2 standard deviation from mean move is likely to just keep going higher. And how high? You got to go to the monthly to see. Look at this breakout. $78, $80, $100. Why not? Why not? And I mean, this is another thing that people should be looking at. When XLE tops was May 2008, bottomed March 2009. May 2008. This is October 2007. So you see, SPY had already put in a massive correction. And by the time they retraced to the 20, which was your sell signal, right here, by the time they retraced to the 20, that is when energy topped. And then they all bottom at the same time in March of 2009. So that's what I'm trying to tell everyone here, right? They top at different times, and that they follow a cycle, right? Small caps go first, and energy and consumer staples go last. And when they go, SPY had already started the correction. And things during these type of market conditions, things like pets.com, this is where they get wiped out. They don't come back. And to me, that's where we are in this condition. And looking at across the board, the only theme that I can continue to come up with is have a script that'll tell you when these 2 standard deviation from mean moves or greater conclude or start. How to identify that they've started and finished so that you know when it's safe to hop in from a reversal standpoint, and so that you know when it's safe to buy from a breakout standpoint. Because the objective has to be to identify the things that are moving higher and buy them, or identify the things that are moving lower and sell them short. That's how you achieve the alpha. I know this video is getting a little bit long, so we'll wrap it up here. I hope you like it. If you do, hit the like button, share it on social media, subscribe to the channel, check us out on Twitter, MarketWizard87, and I'll see you in the next video.